Top-down analysis is single-handedly one of the most important things you will learn when it comes to building a consistently profitable strategy. In this video, I'll be showing you the exact timeframes I use in synchronization to accurately and consistently win trades. This is going to be a simple and well laid out approach which you guys can follow step by step. Right, so jumping onto the charts, the first thing we need to establish are all the time frames that we're going to be using. So if you look on the top left hand corner, you can see that the time frames that we're going to be using for this top-down analysis are the daily time frame, the 4-hour time frame, the 1H, the 30-minute, and the 5-minute time frame. Now the second step is to divide the time frames into two sets. The first set we're going to divide into are the swing trades, which consist of the daily time frame, the H4 time frame, and the 1-hour time frame. The second set consists of the intraday trades, which is the 4-hour, the H1/M30, and the 5-minute time frame. Right, so now that's established, let's begin the first example using the intraday time frame set. So if we use the replay tool to give you an example, we're going to begin our example on the 4-hour time frame. Now on the 4-hour time frame, we need to look at market structure to determine what direction we're heading in. So as you can see, market structure is creating lower lows and lower highs. So we know that the 4-hour time frame is bearish. So that's our first step. Then we're going to go down to the 1-hour time frame, or you can use the 30-minute time frame as well. And on that time frame, we're going to use the replay tool again, and we're going to begin it from right over here. So now again, we know the 4-hour is bullish. Now on the 1-hour time frame, we also need to establish structure. And you can see if we zoom back out that the 1-hour time frame has given us this huge push down, and we've created this lower low, breaking this prior low over here. So we know that the 1-hour is also bearish, and now we're going to find some sort of significant level which we can now look to sell off of, because we have two time frames in synchronization with one another. And if we zoom into the current price action, you can see price is failing to create that higher high, and we've created this sort of double top formation right over here at a nice level of supply on the left hand side. Now the last thing to establish is the 5-minute time frame within our intraday set. So on the 5-minute time frame, we also want market structure to be bearish. I hope you guys can start to see the pattern we're looking for. We want to see bearish market structure on all three time frames before we look to sell. That's how you want to use top-down analysis. So on the 5-minute time frame, again, if we zoom back out, we can see market structure overall is bullish, creating those higher high points. However, we've now started to create this substructure where we're creating lower lows and lower highs, and then it was from this point right over here where we've created this new set. We've broken above these highs, so we're currently creating these higher high points from this point over here. So currently the 5-minute time frame is bullish. Now that's not in line with our higher time frame structure, so we now need to wait for a shift in trend. Now we can either wait for a break in retest, which will be something like this, before we can look to sell further down, or what I like to do to get in early is look for a double top, which shows us the fact that price is failing to create that higher high. So since we're bullish market structure, we want to see a higher high being created. However, if we fail to get that, we can then conclude the fact that this is going to be our new higher low, lower high point from this point right over here, so we can then begin that move to the downside as expected using our higher time frame. So what we want to do is wait and see what price action does, and as you can see, this very next candle closed right back below this high point over here, and this is a nice double top formation from this point over here. So this is where you can now easily enter, knowing the fact that all time frames are in correlation with one another because we've used that top-down analysis, and then you can just let price play along during New York session, and then you can have a nice TP hit or wherever you're targeting. Now the second example I'm going to go over is the swing trade set, which we went over, and that begins on the daily time frame. So using the replay tool, we're going to begin from this point right over here where price has come back, retested, and given us a wick rejection followed by an opposite candle at a daily level of demand. So you can see price gave that push up, retracement, higher high, and we've come back into that level of demand 2 times. So now at this point, we know that daily time frame is bullish, and we can drop down to the 4-hour time frame to see what we see in terms of market structure over there. So now looking on the 4-hour time frame, we can see market structure is overall bearish from this point, as we've seen that huge push up, breaking these lows and creating lower lows, as you can see. However, what I want to see is price failing to create that lower low, because we want to see a lower low being created in a downtrend. If we fail right over here, this is then early signs that price can see a shift in trend and a reaction off of that. So as we play price along, you can see price has pushed down into this level over here and given us a wick rejection, followed by again a opposite bullish candle. And so these are good signs that price is holding this bottom right over here. And now if we've seen this level of support being created, the next logical step is to see a further push to the upside. So drop into the 1 hour time frame, which is going to be our entry time frame. This is a prime example of a shift in structure. So we've gone from creating lower lows and lower highs to then seeing a break of structure from this point over here, and then we've seen a retest back into our area of interest. So if I mark this out a bit more clearly, you can see this high point has been broken, and then price has come back into this key area of interest, which is our level of demand. Now from this point, you can enter a long opportunity with your stops just below these levels over here, and you can have whatever targets you want to have in accordance to your strategy. But the point being, the daily time frame, the 4 hour time frame, and the 1 hour time frame are in all synchronization with one another in accordance to the top down analysis, and then you can have a nice trade follow through into TP. So this just increases your probabilities of having a higher accuracy and an A+ setup. This last example I'm going to give you is going to be on gold, and this is going to be more of an advanced example on top down analysis. So I'd recommend for you guys to start implementing this advanced example once you've got the hang of the top down analysis of the basic 2 examples I gave you to begin with. So the reason this is an advanced example is due to the fact that we're going to be taking advantage of the substructure movements as well as the overall movements as well. So what do I mean by this? If you can see on the 4 hour time frame, overall market structure is bearish and we've seen that push down. However, we've then started to create this sort of substructure bullish, creating higher highs and higher lows. So what this advanced example is going to show you is how you can use top down analysis to take advantage of this push up, and then to also take advantage of this push down within that overall structure you've seen over here. So since this is more of a longer term move, this is going to be using the swing set that we went over, and this begins on the daily time frame. So on the daily time frame, if we use the replay tool and begin from over here, you can see the fact that price has come back into our level of demand and has given us a nice big engulfing candle rejecting off of this level of demand. So we know that the daily time frame is bullish. Coming over to the 4 hour time frame, you can see that market structure is overall bearish. However, it has shifted to the upside. So we've now created this higher high point, breaking this structure, and we've created this higher low point, as you can see from over here. So if I make it more clear for you, you can see these are higher low points, and these are your higher high points being created right here. So now at this point, I want to see the 4 hour come back into a discounted area before I can start looking for that push up. So as we see that retracement down and that wick rejection, we can then now start to go over to the 1 hour time frame. So this is going to be now our entry time frame where we're going to look for potential buying opportunities. So on the 1 hour time frame, you can see market structure is overall bullish from this point over here, as we've seen that break and retest of this high point over here. So what I want to now see is price coming back down into this level of demand right over here before I see that push up that we're expecting based off the higher time frame. So as we play price along, you can see we've seen a tap into that level followed by an engulfing bullish candle. This is where we can take our entries with our stops just below these lows over here, and we can be targeting higher time frame right over here. And as we play price along, you can see price has seen that nice push up. We've then seen this consolidation, and again, it's important to know that market structure is creating those higher high points. As long as we're creating this market structure to the upside, we're good to hold. Now this is where it starts getting a bit more technical. So if you come back to the 4 hour time frame, you can see that now, since we're overall bearish from this 4 hour time frame, we need to know where we are in market structure. So the 4 hour time frame has given us a nice reaction off of this level of resistance right over here. So now we can take this move to the overall downside as we was expecting from that higher time frame. So we've capitalized off this substructure move, and now we're going to capitalize off this overall push to the downside. So what we're going to do is again wait for a wick rejection and then a bearish candle, and as we play along, we haven't really got that rejection just yet, so we have to wait. And now this is the prime opportunity. We can now drop down to the 30-minute time frame to look for our entries. So now on the 30-minute time frame, again, we need to pay attention to market structure and make sure all of our time frames are in correlation with one another, and that's where your top-down analysis comes in handy. So if you can see on the 30-minute time frame, price is failing to create and break above this high. So we've seen a double top formation. We've then seen a bearish engulfing candle, so we can enter right off here with stops just above the high, and we can again start targeting those lows over here. And as we play price along, we can see a nice meltdown in price. So this is a bit more advanced as we are implementing substructure and overall market structure as well to capitalize off both of these moves in accordance with our top-down analysis. If you guys found this video helpful, make sure to check out the Forex Foundation playlist by clicking here.